There we go. Swing high to swing low. Outside return. Swing high to swing low. Come on. Trading view is being difficult today. There we go. Swing high to swing low. Outside return. Swing high to swing low. Repeat. Swing high to swing low. We should expect an outside return to come to our previous structure low. So if I go ahead and draw a horizontal line on here, this is the level we're expecting the market to retest before we continue to the downside, or at least continue to retest those structure lows. Now again, you do want to do your due diligence. I don't normally trade this pair, so you do want to check out oil on the higher time frames. Make sure we're not at a major structure level on the daily or the 4 hour. But on this time frame, here's what we got. We've got a structure level right here on this black line, correct? You see the market hit it once, broke below it, support becomes resistance, bang, market tried to get through, held. Market tried to get through again, held. So we essentially double topped at this level, hitting it 3 times. The last 3 times we touched it, the market has shown to respect it. If we zoom in a little bit more, well, I guess the first thing we should be telling ourselves is this a level I want to get short at? Yes or no? I can't answer that for you. That's up to you. I would say yes, personally. Next question is, how can I get involved? Identify, predict, decide, execute. How can I get involved? And we actually have a potential Gartley pattern here, bat pattern. Let me just check, see if it's a 618 or a 50% here. Looks like we missed the 618 by a little bit. Check your chart. It may be slightly different. Looks like we have a bat pattern here, which is going to give us an X to A to B, B to C, and the C to completion right up at this level. And again, I'm not drawing it in exact, but just giving you an idea for what it should be at. So not only do you have, again, you identify the overall trend, the underlying trend is bearish. You predict what's going to happen. Well, the market is most likely to hit our previous support level, which is now resistance, and then give us a retracement or an extension down to the downside. We decide that this is a level we want to get involved in. Now the question is, how are we going to enter? Well, if you're an advanced pattern trader, guess what? You've got an advanced pattern, a bat pattern completion, right at the level you're looking at for a structure-based trade. Again, you want to take the trades where everything, the stars and the moon align. Everything is on the table right there with a big sign that says, free money, take me. Those are the high probability trading opportunities we want to involve ourselves in. So, lastly, before I run out of time here, this is one I shared with my syndicate members on Wednesday, maybe. We're looking at Euro Aussie on the daily. You can see this on the 4 hour too. Maybe I should go down to a 4 hour chart. No, it's easier on the daily. This is one for you guys that like risk rewards. Again, it's going to be another Gartley pattern completion. It's going to be a very deep one. Our X leg is going to be right up here. You can see we have an impulse leg giving us an X to A. Swing high, swing low, X to A. A to B retracement. Now this is going to be a very, very deep retracement, meaning it doesn't reverse right at the 618. It's going to go a little bit further. But as long as we don't hit that 786, we're still in good Gartley pattern position. Now the positives about this deep retracement means that we're going to have a very deep completion. And we're going to get a D leg for our Gartley pattern here that completes right at 4693s around this area, right near our DSR level. And what's the benefit of this? Well, we know where stops need to go, right? Stops need to go above our X leg. So our stop loss needs to go somewhere probably around this 4750 area, just to give you guys an idea. Which means, if we're entering right here at the completion, stop loss goes right here, we're looking at about a 77 pip stop loss. Now, don't get out of hand about 77 pips. If you're a trader that trades on the daily chart, this is not big at all for you. But I want you guys to concentrate not on the pip amount, because there are ways you can get around that. We can change position size. We have alternate entry techniques. Tons of ways we can deal with that. Just pay attention to the ratio, the risk-reward ratio. Our stop loss is right here. Let's draw it out a little box for that. We're looking at entering here to here. And it may be less than that, actually. I may have shortchanged myself a little bit. Let's do that one more time. We're looking at entering at 46, yep, 55. There we go, 58 pip stop. Makes it a little better for some of you. But we're looking at a risk of about this much. Boom, let's make it red for risk. However, Fibonacci retracement from our A leg to our potential D leg completion. Our reward is going to be our 382. See, this is when it's starting. Some of your eyes are getting wide, saying, "Oh, I see what you're talking about now." This is our reward compared to our risk. We're looking at risking 58 to potentially making 179. Now, I'm not the best with math, but you're probably looking at about a 4-to-1 risk reward here. Let's see. We've got 1, 2, 3. As I said, I'm probably not good at math. So, a very good risk reward here on Euro Aussie. So, there you go.